Hello, everybody, and welcome to Commodity Culture, where we give an overview of the commodity space for both new and experienced investors. Before we get started, standard disclaimer, none of this is investing advice. Do your own due diligence. And today's guest is a much requested returning guest, Mr. Lobo Tiggre from the Independent Speculator. Welcome back.
I'm very happy to be here, and particularly if the audience requested me. How can I help?
Well, let's start off with a big question. If we're looking ahead to the next decade, a lot of people, myself included, believe that, there's a bull cycle for a lot of commodities that's going to be coming up here, and this perhaps already started in many of them. If you could only choose one commodity or one sector, however, to invest in over the next 10 years, which commodity would it be and why?
Okay, Jesse, I will answer the question because you've asked so politely, but I have to say that I hate these kind of questions. And it's not just because they put me, the guru, on the spot. I don't want to be a guru. I don't want to pretend that I know the future, because people that do that and persuade people to invest based on their supposed knowledge of the future, I think are very dangerous. They hurt a lot of people. I don't want to be part of that. But the main objection isn't just selfishly not wanting to be wrong if I say the wrong thing. It's that I think it's wrong-headed from the audience's perspective. Nobody should go all in on any one commodity or metal or any investment, actually, not even in our space. It's just not good strategy. A basket approach, even amongst the commodities, is good because nobody does know exactly what's going to happen, or some new law or some new development could just change everything. And even just not just commodities, but I don't think anybody should only be in commodities. You should have, my expertise as a due diligence guy is to help you with your metals and mining stocks. That doesn't mean you shouldn't own anything else. So I just think that's important. Sorry for derailing the conversation, but whenever anybody asks what's the one thing, I always want to stress that, because nobody should put all their eggs in one basket. Everybody knows this, but somehow in the investment world, they forget that they're dealing with eggs in baskets. Very fragile eggs, by the way. People drop the bloody baskets all the time. So that said, if you put a gun to my head and I have to pick one for the decade, is important here. You said for the decade. If you said this year or the next couple of years, different answer. For the decade, it would be copper. Hands down, no question. I'm a gold bug. I love gold. I think gold's going higher. I'm very keen on uranium. I know you're interested in that too. But over a 10-year time span, that's the one that is most relevant. And I think the most unquestionably. I mean, uranium, it's not rare. It can easily peak and come back again. Gold, big complicated question. I mean, if they drop zeros off the dollar, what happens to the gold dollar ratio? Depends on your dollars. I like a lot of different things, but over a 10-year time span or longer, copper is just a no-brainer. There's not going to be enough of it. Sort of everybody knows, all the industry experts, not just me saying this, is the Wood Mackenzie's of the world and so on. There's just not going to be enough of it. And it's getting harder and harder to permit mines big enough to matter. And this looks, copper, difficulties in copper supply look baked in the cake for not just a decade, but decades to come. So that would be my number one answer to that way you phrased the question.
Okay, well, thank you very much for answering, even though you hated it, just trying to find out what you're most bullish on at the moment. So let's dive into copper a little bit. It's so required for the electrification of the world, for the whole new green economy that seems to be being developed at the moment. And we've seen a fairly significant drop in the copper price since it reached all-time highs of around $5. Do you think now is a good time to be looking at this space, or are you more sitting on the sidelines now expecting a bigger correction overall in the market?
It is a time to be looking for sure. There's window shopping, and then there's, we got to have it by, Thanksgiving dinners tonight kind of shopping. And I would say we're not in that latter category. And the reason is not that I don't think copper is going higher or all the industrial commodities. I do think we're in a commodity super cycle, and I do think the stagflationary environment that we're in is actually bullish for all commodities. But in the near term, you've got this sort of surprise that nobody except for, you and me and our audiences, oh, hey, there really is going to be a recession, or, hey, we might actually be in a recession already. And now, oh, well, that's just a technical recession. It doesn't matter. Well, no, it does matter. You could see consumer behavior altering already. The credit card information, other things like that, even the jobs, the jobless claims starting to creep back up again. So, don't listen to the dismissive. I don't want to pick on this White House. The last White House was kind of detached from reality too, but this one is dismissing this recession talk. And I'm not digressing. This is important. The recession is real. I think, forget soft landing. The mild recession is now the accepted consensus, right? Now they're accepting there is going to be one, but it's going to be mild. It's going to be short-lived. No big deal. It's the necessary price for taming inflation. And I just think that's BS. It's not going to be mild. I don't think it will be quick. And I'm very skeptical that it will really cure inflation. Now you'll hear that it's cure inflation. Sorry for this, but you'll hear that it'll cure inflation because it comes down to 8% or maybe 7 or even 6. That's not curing inflation. That's still high inflation, which fits into the bullish commodities, which fits into your copper question. So, but near term, the traders, they hear these, they drink the consensus Kool-Aid. They think, oh, it's going to be short, it's going to be sharp, it's going to be ended soon, but it's a recession and that's bearish for industrial commodities. So we're going to sell copper. And I think that's what's happening already. It got ahead of itself. I mean, anything that goes vertical is ripe for a correction just anyway. But beyond that, I think it's fallen farther than it, just a toppy correction would do it, because now there's this perception. People are accepting, the traders out there in the world are accepting, oh, we are going to have a recession, therefore sell everything industrial. The economy is going down, therefore sell everything industrial. But that doesn't actually mean that demand has fallen. That means that traders are anticipating forward-looking markets, right? Traders are anticipating falling demand. They're driving the price down now. At the very time where we see, despite the scary headlines, China may be starting to come out of lockdowns and things, there are reasons to see sustained demand in the near term. And it's not just China, there's also the green agenda, other things like that, specifically to copper. So we actually haven't seen the demand destruction yet. We've seen it priced in. So the good news is that if I'm right, and we are in a stagflation environment and commodities prices remain high, and if these other factors, China opening up, the green agenda, bolster demand, physical, real world demand, the traders will be wrong. The trade reverses itself, price goes higher. But I don't know when that happens. This is, sorry, a bit of a long-winded, but this is the correct answer to your question, Jesse. I am looking to buy in this space. I'm particularly keen to buy more copper plays. It's of all the different industrial and green minerals, copper is my favorite, but I'm not ready to buy now. Even if we had a market crash, like if the Fed scares the pants off of everybody in a couple of days and the markets crash, I would buy gold and I would buy uranium, I'd buy other things, but I'd still hold off on the industrial minerals because that, pricing in of recession, I think, incorrectly into industrial minerals is not done yet. So the cap on this is, let's see how this recession story plays out. And at some point, there will be a pretty clear signal that, oh, the demand is still there. And that's when I will be looking to buy copper and maybe other industrial minerals.
I'd like to unpack what seems to be an emerging energy crisis going on, particularly in Europe. Obviously, I personally think it's the result of a lot of misguided policies by the ruling elites being pushed onto people. And then, of course, the Russia-Ukraine conflict kind of threw fuel on the fire. How can investors profit from this situation? And I want to say that carefully, because we're not talking about profiting off of war or anything like that. This is a situation where investment is needed in a lot of these energy-producing commodities. Where do you think people can position themselves to, make the best of a bad situation in that case?
Well, it's good of you to be so conscious and careful in your phrasing, but I'll be the black hat here and I'll say, I am a speculator. And I think the speculator who buys gasoline or cigarettes and then sells it in a time of war at a profit, I think that person is actually doing a social service. And they deserve to be rewarded with high prices if they had the foresight, if they guessed right, and they said there's going to be demand for this, and now they're the only supplier. Nobody else thought of it. Nobody provided for the rainy day. Now the rain's here and the speculator has the goods in that rainy day. I think they deserve to be paid for that. So let me just put that in there. To answer the question, though, well, just before I give you a specific commodity answer, one thing I think that's very important in this question is that it's not just the war, it's not just the shooting match. That's the proximal cause, but the bigger picture is the economic war, the new Iron Curtain that's going up. That is a huge, huge deal, Jesse, and it's not going away. I mean, just think about the price paid for the last Iron Curtain and the peace dividend that for decades the world has benefited from the collapse of the former Soviet Union and the end of the former Cold War, or largely end. We're looking at a reversal of a major trend in that space. So it underscores your question. Yes, I think this is very bullish for energy commodities going forward. I think triple-digit oil is the new normal. Doesn't mean it can't go lower, went to the high 90s recently. It could go down in the recession fear, right? If traders trade it down in a recession, it might go down to 85, 75. But it used to be that oil prices were centered around plus or minus 60, and they would fluctuate above and below that. I think that is the new normal, is, $100 oil is the new 60 going forward. And that has investment implications across the energy suite. And I think that's a much better answer than just pick the one best energy commodity. I think that idea that triple-digit oil is the new normal, the base from which we fluctuate, is an important and investable idea. But to answer your question, again, it kind of depends on the time frame here. But I think in the near term and over the next year, clearly LNG is a winner. Whatever happens, whether Gazprom suddenly finds the other 60% of the gas it can't seem to find right now, or for Europe, or whatever happens in the near term, Europe is rerouting. Europe is seeking other inputs. You can't build a pipeline quickly, but you can redirect a ship full of LNG. So I think this is very bullish for LNG, almost regardless of what happens. Doesn't mean prices can't fluctuate. Gas has corrected, but I just heard a talking head. I know I'd like to give him credit, but I don't remember who it was, but it's just a shocking number to think about in this regard. He was saying that if you turn natural gas into barrels of oil equivalent, that the recent spike in Europe was, depending on the location, we're looking at $600 to $800 a barrel of oil equivalent is what gas shot up to. That's a pretty shocking statistic, even to people like us who pay attention to this. Wow, like $600 to $800 a barrel, and people happy to pay it if they can get the goods, right? So I think this really underscores this. The pincer that Europe is in now isn't going away, almost no matter what happens with the war. If Putin has a brain aneurysm, wakes up tomorrow and suddenly he's the Grinch and his heart grew 10 times and he's all happy, friendly, and he makes friends, he apologizes, opens the floodgates, wants to, Ukraine to be free and independent, gives Crimea back, right? All this, it's not going to happen. But even if that happened, I don't think Europe would be, oh, okay, but we don't need any more, we're just happy to rely on Russia going forward. Of course not. So I think this is a very durable trend. I also, just to segue from that, though, I think the whole energy suite looks good, even in a recession. The new Iron Curtain matters. This division, and Russia as rapidly rerouting as it can its products to other markets, it matters. And picking your right energy supply, and depending on which side of the new Iron Curtain you're on, and the right side, your side of the new Iron Curtain, I think is an investable premise.
Do you think there's any opportunity in coal right now, the most hated of commodities, one spoken of only in whispers in back rooms? People seem to completely ignore it. I haven't found a big investment community behind it on Twitter. There's almost no content anywhere you can find on YouTube, for example, where people are really going in depth on coal. I think a lot of people are writing it off and just thinking that, well, that's a thing of the past. Do you see any opportunity there now, particularly as places like Germany, fire up coal plants due to the fact that they've, stopped the nuclear plants for some insane reason? Do you think there's any opportunity there?
Yeah, they have so many tsunamis in Germany, and so much sunshine, right? Never mind. Yes, but there have been crunches before. I remember quite a few years ago. I can't remember what year it was, but it was before I left my prior employment. And I've been the independent speculator for 4+ years. So this is a while back. And It wasn't just before, it was some years before. I remember there was a big promotion on coal. And, one of the resident gurus in the stable had this epiphany about, this most hated of commodities was a contrarian opportunity. And let's just say he was quite a few years early, as I recall how that worked out. So the premise is good. And I actually am bullish on oil as well, as hated as that is. The ESG constraints, the industry, despite Biden out there saying pump more, he's not permitting more. And the cost of capital hasn't come down. ESG-minded investment funds are still not piling into, O&G, oil and gas companies, right? So you're still looking at structural supply issues in the oil patch writ large, oil and gas, and you could even throw coal likewise in there. And that's actually bullish. But whereas, LNG we started with can be shipped wherever. Gas, you need a pipeline. So that's why I like LNG more than just any old gas right now. Oil, you can ship anyway. Coal, you could, but the bulk thermal coal is not, even at higher prices, it's not the kind of commodity that's cheap to ship relative anywhere. I mean, it's a low bulk thing that it's kind of a regional commodity. Where can my train reach, cheaply from the mine? Coking coal, met coal is different, but on the energy front, burning coal for electricity or heat or whatever, that's not as fungible as oil or LNG. So I appreciate the question. I like the contrarian thinking. I do see a bull thesis there right now, clearly. I don't see it lasting. I think of all the different kind of energy sources desperate countries might, rotate to temporarily, coal will be the most resisted and the most quickly gotten rid of as soon as they find other ways. So it's kind of a lit fuse, and you have to be careful about, which source is positioned to best benefit. Some new coal discovery right down the river from a Hydro-Quebec power plant, that doesn't excite me right now. German coal, that makes more sense to me. I don't have a recommendation there. I'm just saying the thesis makes sense to me, but be very sensitive on timescale here, because when the market finds alternatives, they will dump this like the hot potato it really is.
Let's touch on the monetary metals now. People who hold, especially physical gold and silver, complain so much on YouTube comments. If we were to judge that investment community just by the comments, you see a lot of people who can be very impatient. You are one of the most level-headed analysts out there. That's why I love listening to you. It's why I love having you on the show. As a voice of reason, what would you say to those people? I've had people in my comments saying, I give up, I sold all my gold and silver equities, can't trust the Fed. You hear all sorts of different things. What would you say to somebody who's feeling disheartened at this point in time in the monetary metals?
Yeah, well, I mean, you just said equities, and we started with gold. It's worth, separating these two and making sure. I suspect that your audience knows this. I don't really need to tell you, but just to make sure, if there's somebody new to the space, bullion is completely different from messing around with mining stocks or exploration stocks, or even the developers that I like so much, right? I own gold, physical gold and silver as insurance. I mean, I have had a financial meltdown where there was nothing else, no other choice, and my silver coins fed my family. So this is a real thing. People so let me say, but to speculate, I don't see gold and silver bullion as a speculation. I don't even see it as an investment. I don't buy gold because I think the price is going up. I buy gold because it's gold. And no matter what happens, it's still gold. If I was going to bury something in the ground for 50 years because I thought I might need it then, well, actually, maybe I should shorten that. Let's say 30 years. What would I put in that box? A Bitcoin dipstick or paper? No, I'd put something real that, I would understand. I could exchange for something, no matter what the world was like then. So, anybody who sells physical gold or silver right now, they just don't get its nature. and you should rethink what you're doing. Now, presumably that isn't many in our audience. Now, the stocks is another thing. If you're speculating on the stocks, or if you're holding GLD or something like that, a gold substitute, as an investment because you think the price is going up, or as a speculation because you think it's going to go through the roof. You know, there's that old saying that markets can remain irrational longer than we can remain solvent. You know, that's an important thing to remember. Mr. Market doesn't care how much we suffer or what we think. And I'm not just saying, you know, stiff upper lip, you know, buck up, buddy. I'm saying, I think something more important than that. And that is, remember that you and I, you know, the kind of person that likes to go down to the coin shop and buy a shiny new gold buffalo or something. We are not the people trading on the comics. And I'm not just saying, you know, a comics conspiracy here, which may or may not be true. You know, JP Morgan, yeah, I get it. That's not what I'm saying. I'm just saying that those people who trade, they don't see things the way we do. You know, they will look at, oh, the Fed's going to hike interest rates, therefore I'm going to sell gold. And therefore you see this perverse thing of higher inflation being bad for gold. How is that possible for an inflation hedge? Right? So I understand not just the pain, but the confusion and the frustration. Like, gold doesn't seem to be doing what it's supposed to be doing. Inflation is way up and gold is down since last year. You know, that's wrong. Well, actually, no. If you think about, again, bullion, gold itself, what it's for, think of that 30-year box, or think of what gold's done over the last 50 years since the gold dollar exchange ratio was free to trade. Gold has gone up. You know, if you look at bullion correctly, it's doing exactly what it should do. Now, does it correlate on the short term with inflation and other things, CPI? So many gold bugs like to say that the CPI is a BS number anyway, and yet they complain when gold doesn't correspond to the CPI. So one thing I would throw in there is that gold often leads inflation. And so when we saw gold spike in 2020, before the obvious consequences of government profligacy played out, that was gold doing its job. So anybody that's confused now or frustrated now and saying, oh, it's not doing what it's supposed to do, understand that it did exactly what it was supposed to do. And you could say, oh, it got ahead of itself. Maybe, maybe not. That's not the point. The point is that as people saw it coming, you know, it priced upwards. And now here's the reality that was priced in. And we really need a new forward-looking expectation. So I don't want to be like one of those guys that has an answer for everything, right? Oh, I know, you know, here's my excuse du jour. But I have said this before the current market circumstance, and I do believe this to be true now. A key difference between what's happening right now and in the 1970s, and I was there, okay, I wasn't a professional trader, I was a kid, but I was putting my lawnmower money and babysitting money into silver coins. That's what I could afford at the time. I participated in that 70s bull run. And so think about it. You know, if you were a financial professional at the time, your lawnmower guy or your babysitter was buying silver coins and showing you his 1880 silver Morgan he's so proud of. That would be like Bernard Baruch back in the 1920s getting stock tips from his shoeshine boy, right? And deciding, you know, the market had topped. So what I'm saying is, in the late 70s, it wasn't just that we had high inflation or the CPI numbers were high. It was the expectation, the firmly entrenched expectation. People knew, they just knew that prices were going higher. And anything I could buy today, not just gold and silver, anything I could buy today that wasn't perishable, it was worth buying more of, because tomorrow I would have to pay more. And that awareness is pretty much absent today. There's a bit of it, you know, and especially during the COVID lockdowns, there was a lot of hoarding and so on. But it's not just the powers that be, it's not just the White House, and it's not just the Fed. The latest consumer readings, the latest consumer survey shows that consumer expectations for not just this year, but longer term inflation, 3 to 5 years out, dropped dramatically. So the average person out there is still drinking the transitory Kool-Aid. This is important. This, you know, we saw that gold worked and did what it was supposed to do when people started fearing inflation coming just 2 years ago. And that fear is not here right now. People are actually confident. I can't imagine why the Fed that completely misread the transitory thing didn't think inflation was going to be a big deal or stick around. Somehow people believe that they're going to control inflation. And their expectations are that the powers that be will actually solve this problem. I don't agree. And I think at some point they will wake up and smell the napalm when they see the economy on fire. I could be wrong, Jesse. That's how I see it. And that's why I'm not at all gloomy or bearish about gold. I'm certainly not giving up. I'm looking to buy. The only thing that's kept me from buying more of either the bullion or the stocks at the moment, well, I have a home remodel that a lot of cash is going into. But besides that, I'm also concerned about a near-term market meltdown. Now, my concern about that has lessened lately, given how resilient the markets have been to some real shocks. But let's see what the Fed does this week, and let's see how the markets play out. And if that concern goes away, I will be buying again in the not too distant future. So you can, subscribers will know I put my money where my mouth is. I have a shopping list ready to go. Should we be so lucky as to get a market crash and I can buy everything on the 50% off rack, I'll be happy to do that. And if not, as soon as I'm pretty clear that's not likely to happen in the near term, I will be deploying. So for what it's worth, sorry, long-winded answer here, but I think there's a reason for what's happening now. I still think that our thesis as gold and silver bulls remains intact, and I am preparing to put my own money where my mouth is on that, Jesse.
I want to touch on uranium a little bit because that is my favorite commodity of all time. I know you're also very bullish on it, but I wanted to touch on the sentiment there because this is another commodity, much like the monetary metals that people believe is not performing as it should. We're seeing a reduction in spot price happen. For those who, watch it every day, you can see that things aren't moving in the direction most people think it should be, and that's despite all of these insanely bullish fundamentals seemingly coming out day by day. So what do you think the reason for that is? And also, how do you think your average investor should deal with that sort of volatility when you really believe in a sector, but it's underperforming what you expect?
Yeah, I understand. There are several important points here. One is I absolutely agree with your thesis. I'm on board. If you had asked your first question, not just which would be the one commodity you could pick to invest in over the next decade, if you had said over the next year, I would have hands down said uranium. Like more than gold, silver, copper, anything else, the answer would have been uranium. And I really do think, I may be wrong, but I never claim to know the future. But I do think that the end users, the utilities, are already being forced back to the table. A lot of those long-term contracts have rolled off. Even Cameco, which was sort of the last man standing that was able to sell uranium at what was then above spot prices because of long-term contracts, that's unwinding this year. And I don't think there's any other large amount of long-term contracts out there at previous prices. So, the spreadsheet guys that run these big companies, they got to be looking at how much inventory do we have. We can't just count on the spot market anymore. And, we need to fill our spreadsheet. We need to secure supply. And by the way, I don't think that price is their number one concern. It's security of supply. When they sign a long-term contract for their power plants, they need to know that uranium is going to be there. So it's not just who's got the cheapest. It's not lowest bidder. It's best quality of bid, combination of factors, including price and predictability of supply. So I think this is happening near term. I think there's evidence it started to happen already. I think Kazatomprom in their last quarterlies mentioned long-term contracts being signed around the $50 range, which seems a bit low to me. And I'm wondering who besides Kazatomprom would actually sign that. They didn't claim responsibility, but it's starting to happen. So what's wrong with uranium? Why isn't it doing what it's supposed to do? Well, these things are opaque. Even Kazatomprom didn't say who or when. We'll have to be combing through company financials in the future to see who signed what when. But right now, on a day-to-day basis, we don't have that information. And you do have still knee-jerk, again, program traders, not your typical Justin Hoon uranium bug guy out there. And, hats off to Justin for being the uranium guy. It's not us who set these prices, by and large. The closest came when Sprott came in last year and hoovered up the excess cheap uranium out there, which I do think, by the way, is important here too. I think that was a game changer. That was a one-way transition. Anybody out there who was willing to sell at $20-$30, they're gone. They've been bought out. So I think that puts a bit of a floor under where we are now. I hate wishy-washy words like bit of a, I hear that, some guru is out there telling you what will happen. So you might want to be a bit more risk off. No, either you're risk off or you're not. Okay. So I do think that spot hoovering up the super cheap pounds out there provides real and substantial support under the price of uranium. And I think that's one reason why, even though there's been all this bearish sentiment, if the mid 40s is the worst we're going to see, that's pretty good, actually. Your lowest cost producers out there can actually make money out there. There are not enough of them to supply the market, but that can happen. So, okay. So what I'm saying is that I'm remain very bullish, absent a major nuclear accident. Always got to throw that caveat in there. Absent that, I am absolutely convinced that we will see higher uranium prices within a year, if not by the end of this year, on the basis of long-term contracts, which spot cannot ignore. They can't fluctuate around. They do differ. But if you look at long-term charts of spot and LTC prices, they do track. So I'm extremely bullish. So why isn't it going up? Well, in the same way you've got copper selling off, I think, too much. You've got a sort of knee-jerk reaction of, oh, recession, that's bad for the energy sector. Oh, so you sell everything in energy. I wish I could grab these people by the lapels and say, base load energy is not like people deciding to drive a little bit less. You don't want the power going off for your hospitals and your factories and things. The factories have to shut down, not just throttle back. So I guess that's, we could say more. Probably Justin would be a better one to dive into the details. But I think spot uranium is currently the victim of broader market volatility. It's crazy. We've seen, and remember the stocks, never mind the spot uranium, the stocks are stocks. And we've seen days when spot uranium goes up and the stocks go down because the broader market's had a bad day. The good news is we've actually seen a little bit more ungluing of that recently. This makes me a bit optimistic. I'm not ready yet to say that, uranium stocks are now, they've diverged and yay, we're free from the broader markets. I'm not ready to say that yet. But we're starting to see signs that that's ungluing. The uranium narrative is picking up. If even the likes of Germany are willing to reconsider nuclear, and that's covered in mainstream news, not just here in the resource sector, I think the perception that uranium is different is percolating. It's starting to spread, and that's also very bullish. And that's why I said, if you remember earlier in the conversation, I said if we got a stock market crash, I'd buy gold and silver and uranium stocks, not copper yet. But uranium would definitely be on the list. Like, I think everything is there. All the pieces are on the board that if I got a stupid cheap buying opportunity, especially on some of the best that got away from me before, no question, I would pile in. I would pile in. And if we don't get a crash, I still have that shopping list, got a lot of uranium on it. As soon as, if the Fed does its worst this week and markets survive and everything looks rosy or whatever, forward-looking markets are looking through the recession, then I will be looking to deploy in that circumstance as well.
Do you put a lot of weight on the Russia-Ukraine conflict when it comes to uranium? We're seeing sanctions come down. We're also supposedly seeing some utilities self-sanction by looking for non-Russian uranium sources. Obviously, a ton of conversion and enrichment happens in Russia. They do produce 5 to 6% of the world's supply, not major, but also not insignificant. Do you think that is going to have an impact, or is that more background noise to you?
Well, I think it's already had an impact, and the users may posture on ESG fronts in solidarity with Ukraine, and they may even believe that personally. But as a business decision, I think, again, they're looking at security of supply and the already in place sanctions. Uranium itself has not been sanctioned entirely. But Russian, I want to rewind on that. I'm not actually sure if what I just said is true. So I just have to be honest here. It wasn't, but there's been new sanctions and I'm not really sure exactly where that is. But I know that the state-owned or quasis, the government-run Russian businesses have been sanctioned, and the big enrichers are Russian state-owned. So even though there hasn't been a list of, X, Y, and Z Russian company that enriches uranium is officially sanctioned, they fall in the category. So the end users, I think, are reacting very rationally to that, appropriately. And even the U.S. administration has proposed this, 4.5 billion enrichment encouragement bill in Congress. That caused some excitement. The war itself caused a spike in uranium prices and uranium stocks, which returned. And that's normal. People get all excited and then they realize, oh, wait a minute, nothing's actually happened yet. The news of this 4.5 billion for enrichment, that caused a similar excitement, particularly in the stocks, the most likely to be affected stocks. But it's just a proposal, right? It hasn't actually even, as far as I know, the legislation hasn't even been introduced, let alone passed, let alone appropriations, mobilized. Even the 75 million that's already been appropriated for the U.S. uranium, rainy day fund. As far as I've heard, they haven't bought a pound yet. That was last year. And it hasn't actually happened, in terms of where the rubber hits the road. So all these things cause these spikes, they go away, and they should. People, speculative fervor should abate. But they're still part of the reality of the marketplace that we're in now. They're part of the risk reward calculations that both the participants, the miners and the end users and the enrichers, they're all considering these variables, and the investors as well. So I don't think it's wrong for uranium bugs to look at these inputs and say, oh, well, this adds to my case. I think it's real and material, and it's happening. And it's, if anything, it's picking up speed. So me, I don't like to make big, bold predictions. The market's going to crash this week, or uranium's going to go ballistic next week. But I will say that I look at these trends, and my personal take, it's not a promise, but my personal take is that the writing on the wall suggests to me that we will see much higher uranium prices by the end of this year, and we will see a decoupling of uranium stocks from general market stocks. And that alone would be great. Just if things proceeded rationally and the market moved to a clearing price where there was an incentive to production, that would be wonderful for all of our speculations. But that's not the way the markets work. They're never rational. If that starts happening and this decoupling happens, especially if the broader markets are still, they don't even have to crash, but if they're still grinding lower, if they're still caught in the bear hug, and investors are desperately looking for some shining beacon on the hill, some place where, money is getting rewarded, and uranium companies are doing that, the potential flood into that very small niche market could be enormous, because this is headline news around the world. This energy crisis is not just a commodity sector story. It's not just a resource, buff thing. It is worldwide, global headline news. It's, again, not a promise. I'm just saying the fundamentals make me bullish, and this thorium here on top of uranium suggests that there's potential here for 2006, 2007 style rewards. That's my non-hype way of saying things that I would be embarrassed to say.
Well, Lobo, it's been great having you back on again. For those viewers who aren't familiar, could you introduce the Independent Speculator? I can say I'm only a free member at this time, but you're one of the few emails that every time it hits my inbox, I actually read top to bottom. So little bit of a push there for at least the free version, but could you let people know what it entails?
Sure. Well, so thank you for that. And yes, I do have a free weekly letter that I encourage people to sign up for. It shows you how I think, it shows you what I'm doing. I cover the markets, the kinds of things that we're talking about. I don't cover specific companies in it for that. I'm a due diligence guy. That's what people pay me for. And I have paid products for that. If you want to hire me to be your due diligence guy, I'll welcome you. But you're actually, selfishly quite useful to me, even on the free list, because the bigger my list, the more important I am to the companies I do diligence on, the more incentive they have to let me onto their property, stop work. It's inconvenient when you have analysts visit your property. You have to assign chaperones to them. You don't necessarily stop work, but you redevote resources to, escorting the due diligence guys instead of getting the job done. So, it's important for me to have a big megaphone. So yes, even my free audience is very important to me. And therefore, I try to provide value. It's not just, oh, you're a free audience, so here's some, trinkets, you go away, don't bother me, kid. I actually I sit down every week to write this newsletter, and I think, what is the most important thing I can tell this audience this week as resource speculators? So that's a longer answer than you expected, I think, but that's how I see it, and I hope people check it out.
Great. I'll put a link in the description below. Awesome having you back on. Hope to have you on again, and I will work very hard at coming up with a first question you will not hate. That is going to be my next goal. But thank you so much.
Second question. Thank you, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.